Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. Well, these are the top headlines that we're tracking at this hour. It's a steady start to the new trading week. The Nifty trades above the 10,650 mark. Most of the sectoral indices gain in trade, while IT and pharma stocks decline. The Indian rupee weakens to 67 against the US dollar, even as bonds rise after RBI announces $1.5 billion debt purchase. PC Jeweler gains for the third straight day after a block deal. The stock has now gained over 100% in the last 3 trading sessions. And ICICI Bank is among the top gainers on the Nifty ahead of its fourth quarter numbers later today.
All right, viewers, thanks for tuning in to Countdown. My name is Neeraj Shah, and the markets are doing well. We're trading fairly well for the Nifty Bank predominantly, but the other indices are following suit. So trading almost at the high point of the day. Similarly for the Nifty Bank, trading almost at the high point of the day. And IT is not really gone down too much. As a result of that, the 2 key indices are helping the index post what is arguably fairly decent gains at the start of the trading week. Bring up the advanced decline ratio and then the heat map. The market breadth also should be positive, maybe not as strong as what otherwise you would normally have. 1:1 or slightly better than 1:1, but still no causes for complaint. So what's the heat map looking like? I'm guessing more gains than losers. But in the morning, you would remember that all marketing companies were the top losers. And as you can see now, not a single OMC is trading with red. So all marketing companies have recovered a lot of lost ground today. Lupin is still continuing to be under pressure. And on the flip side, on the gaining side, HUL has made a remarkable move today. Banks like ICICI and Axis were anyway starting off with the green, so they're doing okay. But watch out for HUL, some very strong intraday moves. And if we can have the intraday moves of the all marketing companies here once before we move to the top trending movers, because BP, HP, RSC, all 3 started off in the red in a meaningful way, and right now marginally in the green. So it's been a good trading day for the OMCs. Frankly, everybody thought that the stocks would continue to go down. They've defied that and moved into the green. All 3 of them trading fairly well. But what's trending today, not just on the large cap end, but at the broader end of the spectrum too. Before I throw it open to Navneet for the liquid universe, let's talk about what's trending today in the mid cap space. The PC Jewelers that continues to rise and shine, 37% higher now. Difficult to really figure out what will happen to this in the next 1 hour or going ahead for the next 2 or 3 sessions as well, but doing well. JSPL about 5.5% higher, and Indian Hotels is about 4%. Remember, hotel space today is doing reasonably okay. What's not doing well, Wockhardt posts its numbers, has slipped. Ajanta Pharma too down about 3%. Wonder if the small cap space will show Taj GVK, because as I was saying, the hotel space is doing really well. No, not quite there, Taj GVK out here. It is Bombay Burma which is up and about, but Taj GVK too has done reasonably okay for itself. And what about the small cap losers? There should be 2 or 3 names which will come out on the small cap losing side as well. Indocount, Ujjivan, Himadri Specialty Chemicals. Watch out for Himadri Specialty. The last 2 or 3 sessions, it's been cracking with some serious losses. And Ujjivan, of course, on the Kotak note about possibilities of farm loan waiver and what it will do to Ujjivan Financial, is also cracking a bit under pressure today. But what about the more liquid universe, Navneet?
Well, Neeraj, there are a lot of movers and shakers in today's trading session. Before I get to the F&O Qs, can we just pull up the intraday chart of KRBL? There's been a sudden surge that has come about in this counter. KRBL is the company. It is a rise company, and as you can see, just in the last 2 to 3 minutes of trade, it's seen surge of almost 8 to 9%. We'll be tracking this counter for you, but talking about the futures and options market, we're almost trading around the day's high mark. Nifty is inching very closer to the 10,700 mark right now. 25,800 for the Bank Nifty. If you could just pull up the futures of both, we'll get to see what sort of premium they're quoting right now for Nifty, Bank Nifty. Nifty premium just about the same, 26 points. Bank Nifty futures premium has come down substantially. Remember last week the premium was somewhere about between 80 points to 100 range. In fact, as we speak, it's also slipped into discount. Well, in terms of option strike, what's active in today's session, we've seen some bit of unwinding coming in for strikes like 10,700 as well as the 10,800 call strike. So watch out for this one. There's a lot of put riding which has come back into the system today. So be it the 10,500 strike, which has so far added nearly 2 lakh shares. Maximum addition has been seen for the 10,600 strike, which has seen addition of almost 6.5 lakh share. Remember, in terms of OI concentration so far for the May series, it is between the 10,500 and the 11,000 call strike, which is telling you that's the probable range that one should watch out for this series. Well, in terms of stock futures, work hard, reacting negatively to its numbers. Obviously, the numbers were not so good. They posted a loss of 155 crore for the quarter. It's fallen on very high volumes on the cash side, so definitely watch out for the delivery data here. And also on the future side, significant amount of short positions have been built up, as you can see right there on your screen. Open interest is up nearly 30%. The other one is Jain Financial. Remember, when the markets opened today, this one was pretty weak right from the word go. And if you look at the volumes, it's fallen on high volumes on the cash side. Fresh shots have been seen for the future. There is some news in case if BJP comes into power in Karnataka, the news of farm loan waiver may not augur well for a company like Jain Financial. So watch out for this one, because they've included that farm loan waiver in the BJP manifesto. That's about the futures and options space. I guess the broader markets are also too catching up with the benchmark indices. Let's just quickly do a check of mid-cap and the small-cap indices, how they are also faring at this point of time. The market breadth has been pretty much positive, which has been a concern actually for the last few sessions. So as we speak, almost at higher level for Nifty Mid-Cap 100 Index, and the BSE Small-Cap Index is also trading with gains of 0.5%. Well, it's Monday. It's that time when we get you a global voice to tell you about the whereabouts in the global equity markets as well. So joining us today on the show is Maximilian Kunkel, Chief Investment Officer at UBS Global Wealth Management. Hi, Max. Thanks a lot for joining us today. My first question is, what are the key trends that you're witnessing in global equities? Because if I look at last year, it was all about liquidity, and 2018 so far has been about higher volatility in the global markets.
Well, it certainly has already been more volatile. What we are actually seeing is a very different environment to last year. Last year, we had a situation where you had above trend growth, both on a macroeconomic and on a microeconomic side. But that was coupled largely with very strong momentum, as central banks were still held back by inflation, which wasn't really normalizing, but that was largely due to technical factors. What we're seeing this year is we still have above trend growth globally, but at the same time, as inflation rates around the world are normalizing, we're also starting to see that a monetary normalization in policy is becoming more imminent. And with that, we have above trend growth coupled with more normal levels of volatility.
Let's talk about the emerging markets basket then, Max. Which are the countries in that basket which are looking attractive at current valuations?
So when we're looking at emerging markets, broadly speaking, we still think that in a world of global expansion on a growth side of things, but at the same time still relatively benign liquidity conditions, emerging markets are likely going to continue to do relatively well. As you already indicated, it becomes more and more important to be also selective here. Our key market, particularly in Asia, continues to be the Chinese equity market.
What's the view in India then, Max? Tell us what kind of exposure do you guys have in Indian equities?
So in India, clearly among equities, continues to be one of those things that you want to allocate to in the long run. More on the tactical side of things, we're neutral on Indian equities at the moment, which is largely due to valuations being a little bit on the high side. We're more than one standard deviation above the long-term average for Indian equities. And although you have an acceleration of earnings growth at the moment, we're forecasting close to 11% this year, 15% next year, we still think that some uncertainty around the elections next year is going to bring the valuation level down, which means that Indian equities are likely going to not perform as well as some other markets in Asia.
So the view, Max, that you're suggesting on India remains neutral, and in the emerging markets basket, as you mentioned, China is something which is looking attractive to you at current valuations. What I want to understand is, have you trimmed your exposure to India if I were to compare it to last year?
So yeah, at the beginning of last year, for example, we went into the year being overweight Indian equities, quite simply because at the time it was a different situation, particularly with regards to the valuation story. What we saw was a very strong rally at the beginning of the year, and then during the middle of last year we neutralized that overweight position. Just want to be clear, we neutralized it, so we never went underweight here, because we just still think that Indian equities are likely going to deliver positive total returns, but are going to lag behind other Asian markets.
Let's talk about the broader perspective then. Do you see any sort of outperformance in 2018 from developed markets like US in light of also the scenario where the guidance has been given there could be more rate hikes, there could be actually 4 hikes instead of the guidance which was given of 3 rate hikes? And also, if one were to go by the recent data, Max, of the non-farm payroll data, which was slightly below what the street was estimating for the month of April, but look at the unemployment data, that's come in at almost 18-year low.
Absolutely. I think when we're talking about the employment data that came out last week, clearly that's one of the most important sets of data that we're looking at the moment, quite simply because historically we know that once the unemployment rate drops 50 to 100 basis points below full employment, markets, particularly in the US, start to get more wobbly. You see Labour starting to get more pricing power, and the Fed starting to become more restrictive with regards to its monetary policy, given its dual mandate is close to being achieved. The problem that we have at the moment is that nobody knows where full employment in the United States is. We think that full employment, due to changes in the composition of the labour market, as well as also technological advances, is likely lower than what the Fed estimates it to be at 4.6%. So for us, however, the key element is not to look at the unemployment rate, but rather look at what's happening on the wages side. And here, average hourly earnings is clearly a good indication of that. Looking at last week, actually that was a very, very good result that we got for equity investors. 2.6% growth indicates on the one hand that there's still room for acceleration in consumption, but at the same time, what we're not yet seeing is inflationary pressure being too high for the Fed to become much more restrictive. So you're looking at that, to go back to your question on equity markets, that actually still bodes well for equity markets for the rest of the year.
So in light of all that data, tell us, how do you see the fund flows panning out between the developed as well as the emerging markets?
What we're clearly seeing at the moment, particularly among our client base, is a greater and greater focus on diversification. What we had over the last 2 years was clients focusing largely on their home countries or regions and diversifying part of that away by allocating to US assets. What we're starting to see, particularly I would say over the last few quarters, is a greater and greater move towards global diversification. So that means from a European perspective, taking some chips off the table in the United States, not going completely out of the US though, and moving that towards Asia. From an Asian perspective, it means exactly the other way around, taking some chips away from the United States and moving those assets to Europe. So depending on who you talk to, I guess the trend that we're broadly speaking is trying to reallocate in order to have a more global allocation at the moment, which is important because we are in a situation where around the globe price and asset valuations are generally at elevated levels, and therefore you want to minimize local risks and take advantage of global opportunities.
My last question to you, since you also highlighted China remains attractive in the EM basket, do you think any sort of trade war between China and US is probable this year? If in case that happens, Max, what sort of impact do you see on global markets?
So we would put a 20 to 30% probability on an outright trade war over the next 12 months. So to the second part of the question, which is how would that impact the global environment, would definitely be negative. What we are seeing is that protectionism in a severe way, or trade wars as they're often referred to, lead to higher prices and at the same time mean lower growth. So clearly that would be a negative part. And we're actually also preparing our portfolios for that probability. So what we've done in our portfolios is, despite being still constructive on risk assets, put some counter-cyclical positions in there, such as, for example, being long the Japanese yen against a very open economy, the New Zealand dollar, or, for example, being actually long 10-year treasuries, which should also benefit in such a scenario.
Appreciate you, Max, joining us today and taking us through your views on global equities. Well, moving back to Indian markets, we're 10,692, so inching very closer to that mark of 10,700. Let's see if we can reclaim that mark and close above it today or not. Just want to highlight stocks like Jindal Poly, Jindal Stainless, all of them have registered good gains of between 8 to 7%. And also the steel stocks have been doing pretty well. So something like Jindal Steel and Power, that's seen gains of around closer to 5 to 6% as we speak. Some bit of long positions too have been built up for JSPL. But talking about the earnings, Intellect Design Arena has reported a strong set of numbers in the fourth quarter. The financial platform backed 12 large transformational deals in the last fiscal, some of which definitely aided the numbers. Well, the company's chairman and managing director Arun Jain joins us now to take us through the fine print, and also joining us from our research team is Agam Vakil to take this conversation forward. Agam, over to you.
Thanks, Navneet. Mr. Jain, thanks for joining us. I'm going to begin by asking you about this growth coming in essentially on the back of AMC and licensed businesses, which now form nearly a quarter of your revenues. Can you tell us if whether or not this strength is expected in FY19, and to what extent can we see this contribution of growth coming in for this upcoming financial year?
I will say there are three key strategies on which we were working in last 3 years. We were looking for calibrated growth which can give sustainability, predictability and profitable growth. So on all the three fronts, we could able to demonstrate a 3-year CAGR of 21% in this industry segment. We are able to demonstrate 28% growth quarter on quarter from last year to this year. We crossed in 3 years time 150 crore to 300 crore. We double our revenue there. We could able to demonstrate 32% CAGR on license revenue and close to 200 crore of license revenue. I think this is about predictability and sustainability, and we are looking forward that should sustain.
Mr. Jain, for the fiscal, it was 12 large transformational deals. Of the 50 digital-led deals that you had, what was that number for this particular quarter? And what is the contribution that we can expect for the upcoming financial year when it comes to these large deals?
So last year we won 50 deals at a much larger deal value compared to the last year. And these deals, out of which 12 are transformational deals, last quarter there are 4 of them out of 12. So the momentum is building it up on quarter. One of the large deals in UK for core banking deal is one of the very important deal, which is more than a $15 million deal for core banking against our arch rival Temenos. And secondly, the other 3 deals which are there, one in Americas, which is again establishing the footprint deeper into America from the top 10 banks, selecting Intellect in America is again a landmark deal. One large deal from Vietnam, over $10 million, is another landmark deal for us. And 4th deal for complete suite of banking, where we are starting a new bank, including trade finance, treasury. So these are the deals which are very unique to Intellect, which is putting us a destination of fintech product company. So what premises we went into market that we are the largest suite of product, I think that is coming in our way and accelerating our agenda on both fronts. One is the pricing front as well as number of deals front, which is giving the pipeline increase from $433 million to $521 million.
Also, your number of days for sales outstanding has come off quite substantially, now standing at 122 days in comparison to 138 days year on year. Is this number likely to decline further, or are you comfortable with these levels?
I believe 122 to 125 is a good number in a product business, because there is a cycle time between what we look at it between license sale and the implementation. So 120 is a good day. More and more moving toward the advanced market, this number is something.
And a word on your debt, sir, that has also come off to a certain extent, gross debt specifically on a year-on-year basis. Are you also comfortable with these debt levels?
No, debt may go up in this quarter because we need to make a payout for the bonus and for the employees. So this debt will fluctuate for a few quarters before it gets stabilized.
So, and what kind of trends are you picking up from your conversations with clients, especially from geographies such as Europe and US, considering well over half of your revenues come from these geographies?
And that's where we Intellect plays a key role. Our investment is most contemporary technology in a fintech space. Our digital platform is rated highest by most of the analysts in the space, and our AI and machine learning platform, where we sold 7 deals last year for the insurance segment, is again one of the best platform which is there. So I think that's what driving us, and that's what we are able to beat our competition for any new evaluation of the product.
Okay, Mr. Jain, we leave it at that. Thanks for joining us and giving us those updates with respect to the quarter and the outlook. But with that, it's back to you in the studio, Navneet.
Thanks a lot, Agam, for that. That was the management of Intellect Design Arena. The stocks touched fresh 52-week high. It's reacted positively to its earnings and still trading with gains of nearly 7%. Well, moving on and putting the spotlight on Edelweiss management, we interacted with last week post their numbers, and they gave some very, very bullish commentary. Neeraj, what's the outlook looking like for Edelweiss?
Well, you know, the reason why I thought of doing Edelweiss today is because of the seasonality chart that the terminal throws up, Navneet. So today I'm actually using the terminal to arrive to the stock. Now, this is what the seasonality chart for Edelweiss looks like. And look at what's happened in the month of May for Edelweiss. The last 7 years, I think it was way back in 2011 when they had a downtick. Yeah, this is May, when they had a downtick of 7.5%. Post that, every single month, there has been an uptick in Edelweiss stock in the month of May. This month, they've had about 1% kind of an up move until now. This is not to say that this is how Edelweiss will behave, but seasonality shows that for the last 6 to 7 years, May has been a rather robust month for Edelweiss Financial Services, and maybe this time around could be no different. Now, what could be the possible reasons why this could happen for Edelweiss? That's what I tried to arrive at. So I took the clock back to some snippets of the conversation that Edelweiss had with us. They had the highest PAT growth in the last few quarters, and the quarter PAT growth was about 46%, which was, I think, the annual PAT growth as well. According to Rashesh Shah, they've had a 38% PAT growth CAGR for the last 28 quarters. That's consistency for you, and maybe doesn't surprise why Edelweiss is doing what it is doing as a stock. Rock steady at about northwards of 250, currently about 290. And I think one simple thing that when we asked him about whether or not his credit book will expand meaningfully over the next 5, 6, 7 years, I think he mentioned that he expects a 4x growth in system credit by and large. For the system, the Indian credit in the system is about 100 trillion rupees, and he expected to move up to 400 trillion over the course of the next 5 to 7 years. So almost anybody who grows at 15 to 20%, the credit book will tend to grow their credit book in the same league, and therefore growth rates in the future should not be our trouble. Now, do analysts factor this in? Yeah, look at the GD and the graphic dashboard, again a Bloomberg terminal indicator, and 9 analysts sell side cover Edelweiss. The average target price is about 358. Compared to the current market price of about 290, there is still quite a bit of an upside that is left. The volumes the last few days post the numbers have picked up steam. In today's session, while it is quiet and it's down about 1% lower, but look at what it does in the month of May. Look at the kind of outlook given by the management. If all things stay all right, there is no reason why this cannot reenact the performance that it's typically had in the month of May. So we're watching out for Edelweiss, but the principal reason why I thought of covering Edelweiss today was because of the seasonality factor that comes about for that stock in the month of May. Post 2011, not a single year where Edelweiss has not had a 3% rally in the month of May.
And good going in terms of earnings as well. Thanks a lot, Neeraj, for bringing that update with regard to Edelweiss. I just want to address a couple of select hotel stocks which are surging in trade. So pull up something like EIH Associated. That's gained almost 6% in today's trading session. In fact, you've also got something like Royal Orchid that's also doing pretty well in today's trade. And besides that, Taj GVK, remember there was a note which came in from brokerage HDFC Securities where they're sounding quite bullish on Taj GVK. That's a joint venture between Indian Hotels sales in GVK Group. That's seen gains of 14%, almost at day's high. Investment rationale, India reports suggest reducing geographic concentration risk, and also some bit of recovery seen in the Telangana region, and also debt repayment to reduce financial expenses that could improve the leverage ratio of Taj GVK going ahead. Watch out for this space, because we've heard managements indicating the occupancy rates are improving. The average room rates have also been inching higher. Well, let's move on and get you some views also going. Central banks don't necessarily have the tool or the know-how, in fact, to deal with it. We've got some conversation going on with our Bloomberg anchor from Indian Governor, former Indian Governor Raghuram Rajan. Listen to it.
We are in a new world where earlier the fight for central banks was against high inflation. And so we put these inflation targets for all the central banks, which convinced people that the central banks would be tough on inflation. Unfortunately, we have the opposite problem now, that inflation is in many cases a little too low. The central banks want to boost inflation. We really don't know how to do it. We don't have the tools that allow us to do this in a reliable way. And as a result, you have all these extraordinary policies which have, in many ways, marginal effects. After 8 years of QE, we have got inflation to what? About 2%. So the point here really is that we don't have too many answers to low inflation, as a result of which we have to be careful that we don't focus too much on that as the be-all and end-all of central bank activity. If inflation is low, well, try and make sure it doesn't sort of start getting into serious deflation, but you really have to wait for time to heal matters and other policies to kick in to get inflation back up.
Then do you support the Fed's move to be hiking rates when, although inflation has briefly touched the target, do you think this is the right thing to do?
Well, it is precautionary in some ways, right? So one of the problems, of course, is we've seen many years without high inflation. That doesn't mean that there isn't a magic moment when all the labor markets across the world that, are in competition tighten. Japan is tight, the euro area tightens relative to where it is, and then suddenly, competition from workers elsewhere doesn't hold down wages, and you start seeing wages move up much more sharply. One of the fears is that the world may change in a more rapid way than we think, and you don't want to be seen behind the curve at that point. So I think some normalization is warranted up to a point where things, are more neutral, at which point you pause and see what the effects are.
BOJ, are they right in continuing to pursue an aggressive monetary policy? They were just a couple years ago still in deflationary territory. They're halfway towards their target. Are they succeeding, and should they continue, or is there a risk?
Well, they're sort of, in some ways, in a tight situation, right? If they say we really don't have strong tools to move us much further down this road, they risk people sort of saying, oh, they've given up. And then inflationary expectations collapse once again. So I think they really have to do what they're doing and continue doing it, and essentially keep saying, we will get there. And in the meantime, the rest of the economy sort of does what it does. Perhaps some of the third arrow that Prime Minister Abe has promised for a long time sort of kicks in a bigger way. But growth picks up for a variety of reasons, and global reinflation helps Japan also. So basically, continue along this path and hope that other things also kick in.
Well, we are almost at 10,700 for Nifty, which is right now quoting at 10,699. So good going, actually. It's a good start to this new week. On Friday, we did see a bit of weakness coming by, but clearly 80 points gained for Nifty as we speak, and 200 points higher for Bank Nifty. But India VIX, remember, that's been a key concern since the morning session. It's been actually trading with gains, but as we speak, that too has come off a bit, the day's high levels, 2.5% for India VIX at 13.7. Good time to get in our technical expert, Hemen Kapadia of KRChoksey, who's right here with us in the studios. Hi, Hemen. Good afternoon. Good to have you as usual. What's the view on the markets now? It's been a good recovery from Friday's session where we saw a lot of selling coming in from the FIs in the cash segment, but it's been a good bounce back. Would you take a bet on Nifty or on Bank Nifty at these levels?
A very good afternoon to you, Navneet. Thank you for having me. I think, like you mentioned, a lot of selling, bounce back, but I think today's savior single-handedly has been the Bank Nifty. It's very clearly positive. We're about 25,800 on the spot, Navneet, so it looks good. We're probably heading towards 26,126, not in a day or two, but yeah, that's what looks like happening. Nifty, I am slightly at crossroads. Some of the daily oscillators like the MACD has signaled a sell, Navneet, so I mean, it's not the end of the world, but one gets the feeling that the Nifty could underperform and maybe sort of consolidate a bit over here, and the Bank Nifty could lead the way. So I'd do what I did last week, Navneet. I'd sell the 11.1 and the 10.4, 11.1 call and the 10.4 put for the next month. I think I don't expect anything significant on either side, and especially with elections through the end of the week. So I have a feeling VIX could creep up a bit and we'd see some turbulence.
So you think that's the reason, despite of markets being higher today, India VIX is also in the
otherwise, honestly speaking, it's supposed to have an inverse relationship.
The election.
Yes, that makes
that's a valid point. Okay, let's get some more views going. Another technical expert on the show today is Vishal Malkan, author and trading coach at Malkansview, who joins us on the show now. Hi, Vishal. Thanks a lot for joining us. What is your view on Nifty or Bank Nifty? Are you trading on these indices currently?
Yes, good afternoon. Thank you for the show. I would like to say that Nifty has had a strong run from 10,000 levels to 10,700 in the last 2 weeks, and that's a very good momentum which is showing. I think there's some time for some days it may go into consolidation between like 600 and 700 or 750 before it breaks out above the levels and goes to the new highs around 11,000. So Nifty would be more of, I would say, like a sideways market for the next few days, but at the same time I would say Bank Nifty should outperform and can give a good move at least up to 26,500 because all PSU banks as well as private banks are showing good chart patterns, and we can see a good move on Bank Nifty.
Okay, that's the view on Nifty and Bank Nifty. Let's see if the outperformance from Bank Nifty continues this week or not. But let's get you some individual stock ideas going as well. Hemen, what are the trading recommendations that you have on stocks?
I think a couple of stocks looking interesting, Navneet. I think as
you spoke about banking stocks. Is SBI something which is looking good?
Yeah, SBI is looking good. SBI is oversold. There is positive divergence, crossover buys on the daily chart. Things are turning positive on the weekly chart. In fact, SBI, Indian Bank, many of the PSU banks are in the midst of a dead cat bounce, and that's happening. Can Bank. So buy on SBI, no need. Around 245, stop loss 241, target 253. Yeah, SBI.
Okay. Anything on MGL?
Well, I'd like to shift that recommendation to HPCL. HPCL is around 299, buy at around 298, stop loss 293, target 309. Upward bar reversal happening, crossover buys, volumes have picked up, now need deeply oversold.
And well, that's been a good recovery. First half of the session, HPL was in the red, and currently it's in the green with gains of almost 1.5%. Vishal, what about you in terms of individual stocks? What are you recommending?
I would go with a couple of stocks, and the first one would be definitely PSU banks, and one of them would be Bank of India, which is showing a good consolidation pattern at the levels of 100, forming bullish divergences on momentum indicators. So hence I'll go with a buy on that with a stop of 99 for targets of 112 in the next few trading sessions. And the second one would be Reliance Infra, which is also forming good patterns on daily as well as weekly charts at 420 levels. Hence, I recommend a buy with a stop of 420 for targets of 460 and 480 in the next few trading sessions.
Vishal, if you track Ujjivan and Equitas on the charts, there has been a sharp crackdown in Ujjivan today. If you do, any thoughts here?
Sorry, unfortunately, I'm not tracking that. Yeah.
Okay, Hemen, what about you? Do you track Ujjivan financial on the charts?
8 weeks. It's not Superman. It can't go on like this. It had to correct. It shouldn't have tanked, but 8 weeks in a row, 330, 425, too much. I think it's a correction within an uptrend, but yeah, it's been overly done, but I guess it was overly done on the upside also. So nothing out of the ordinary. Don't see it going below 380.
Okay, just pull up Equitas as well. This fall is native, of course, to Ujjivan and maybe isolated there, but Equitas too marginally off in the session, though recovered a little bit of lost ground. Sanjiv Bhasin, he's the Executive Vice President for Markets at IIFL, joins us right now on the show. Sanjiv, good having you. As always, good having you. Thanks so much for joining in. I want to start off with these lenders. Sanjiv, if I can humor you there. Day before yesterday, on Friday, Rashesh Shah spoke about how the credit in the system has to move up. He doesn't foresee 18-20% CAGR for almost all players, MSME lenders, micro lenders, etc. to continue. The commentary from Equitas was of a growth of 30-35% for the next 5 years. Down today though, because of a potential possible impact of a loan waiver in Karnataka is Ujjivan. What are your thoughts here? Some of these SFBs and small lenders.
Yeah, so good afternoon. So Neeraj, there will be opinion all over the place because the markets have been defying a wall of worry, that is oil, bond yields and the rupee. And most will be pessimistic because they missed the rally again from 10,000. It's been sharp. Coming to microfinance lenders, I think they are in a very sweet spot. They've weathered the storm of demonetization and some of the farm waiver on UP and others quite well. And if you see the numbers of Equitas, they were standout. The book, aside from the microfinance, has grown 53%, and they are very confident of maintaining higher NIMs, and it has become a scheduled bank. So we are extremely positive on Ujjivan and Equitas, and any decline should be a buying opportunity. And we are not talking of 30-40% upside. I would say in the next 2 years, these are doublers from here. Given that their transition from microfinance into scheduled banks, and you've seen how the change in environment took a Bharat Financial from 300 rupees to 1,000, and now it's been taken over by IndusInd Bank. So in the end, if you have to grow, you need more deeper financial inclusion and so on. And I think both these are very well managed companies. So for us, both these are good buys on declines, but keep a longer term window, because in the short run you will have state elections every 3 months, and that doesn't mean that they become sells just because of a brokerage target.
Sanjiv, so give me the long term picture here. If a company like Equitas is saying that it will grow its book 35% year on year for the next 5 years at least, looking at the valuations that Equitas may be trading at, and looking at the price currently, if it manages to do that up till FY23 from the current FY19 numbers, what could potentially happen to a stock like Equitas?
Well, we'll talk about the 5 years, but in 2 years you will get a doubler. Look at that AU Finance. It has come out with steady numbers. It is again a very strong franchise in Rajasthan. It trades at 4.5 times price to book. Bandhan Bank came with almost 4 times price to book. And these Equitas and Ujjivan trade at 2.5 times. So, you take a multiple when you take the reach. And secondly, you look at their transition. They've gone through a lot of pain in the last 3-4 quarters for cleansing their book, and they've been very, very prudent. They've not tried to disguise any of their book. It's been a very, very transparent performance. And like I said, that's what I'm saying. These are don't miss the woods for the trees. These are the stocks which can actually give you a bang for the buck. I would be relatively saying that this is in 2 years a doubler from here.
Wow. Okay. And then maybe if that book continues, then that base could expand, and then you could have some more as well. Interesting thoughts there. Navneet, we don't have a doubler in PC Jewelers, but a 40% in a single day after a mammoth run in Friday's session as well. It has doubled in 2 days.
Yeah, at least let's say it's recouped some losses of 2018, though I think it's still down nearly 45 to 50% on YTD basis, but clearly it's been a doubler in the last 3 trading session. After 43% gains seen on Friday, it's up another 38%. Just a caveat here, if you look at the delivery data on Friday, Friday as a percentage of whatever was the total traded quantity, at least on National Stock Exchange, it was hardly 10%, which suggests that there is some sort of speculative buying which is happening or selling in this counter, which we all know because how much it's corrected. Even in today's session, let's alert our viewers, it's in the futures and options band. So there was some unwinding, some bit of short covering seen on Friday. Probably that could be another bout of short covering which you're seeing in today's session. As a lot of the option strikes, not the futures, but I was just looking at the option strike of PC Jewelers. A lot of traders who would have taken position there are unwinding those positions on the option side. So PC Jewelers clearly a doubler in the last 3 sessions. But Hemen, what would you suggest now on the charts? Has anything changed for this one?
No, frankly speaking, no, it doesn't make sense. Like you were saying, the low delivery marking, 80 crore volume in the last 8 trading sessions, and such abysmal delivery marking. And absolutely right. I think it's speculation at play. It went down like a rocket. It's gone up like a rocket. You don't go down like a rocket, but it imploded. Now it's up like a rocket. So honestly speaking, stay away. I don't think it makes sense to do anything in stocks like this.
Well, the other one which has gone up in trade, if you could just pull up IFP Industries, that's also seen gains of almost 10 to 11% just in the last 10 to 15 minutes of trade. That's 11.5% higher for this one. Sanjiv, do you track IFP Industries? I think this too has given good returns in the last 1 year.
Correct. That whole consumer durable space, Navneet, is very, very bullish, and you are talking of higher consumption spending, you are talking of a hot summer. Whirlpool, IFB, Voltas, Blue Star, Thermax, I can go on. In fact, top 4 of my top plays have been outperformers in the last 1 year. That is Indian Hotel, Voltas, Thermax, and Tata Global, and they all related to consumption, beverage and consumer durables. IFB Industries again is a very, very strong brand franchise, and that along with Whirlpool should be bought on any declines.
You mentioned Indian Hotel. Sanjiv, do you also like Taj GVK then, which is a JV between GVK Group and Indian Hotels, and that's surging in today's session?
Well, we like Indian Hotel purely on the back of the Vivanta chain, which is expanding, but our top hotel pick is ITC. ITC Hotels will have the maximum rooms available in the next by the end of the year. Today it has the largest play on hotels. It is also looking at a franchise model, and don't just weigh the cigarettes business. It's hotels, it's ITC Haryali, it's paper. I've been repetitive, but I still think 280 should be 325 in the next 6 months. It's the best and the no nonsense play to be bought even at this levels of the index. So for us, whether 2 hotel plays which are very bullish, Indian Hotel as a plain hotel play, and ITC because it's the largest player in this field.
Just to put this into perspective, 320. Okay, no, the camera needs to be on me. Thank you. So 320 in 6 months is about 15 or 16% in 6 months. Annualize it to about 32% in a year, which is far better than almost any traditional form of investment would give you in a company which is as safe, or in a stock which is as safe as the stock of ITC, if it manages to do that, of course. But I mean, I'm just trying to explain Sanjiv Bhasin's point out here. When we hear about things which are going to double and treble, we lose sight of what could happen in a safe stock, and 15% over 6 months is not, chop change. Sanjiv, what about M&M? For long not being discussed as amongst the premier large cap auto picks, the last couple of months, M&M has been the distinct outperformer from amongst the Marutis, Tata Motors, and some of the other larger auto players.
Yeah, so Neeraj, that's because it has diversified its portfolio well, and single-handedly the tractor market on the back of expectation of good monsoon, strong heat wave, and expectation that the harvest season will be good. Along with that, you have more money coming into the hands of the farmer on the rural side. It all augurs well for Mahindra. Their SUV market, their tie-up globally also is showing a lot of traction, and it continues to be one of the reasonably priced four-wheeler auto stocks. We had a buy at 1400 when it was come bonus, and we still have a long-term target of 1,000 rupees in over a period of time. But here we would also like to suggest Maruti wholeheartedly. We think this fall below 8700 may have priced in most of the weakness of the results, And given that their new models will again start to play out by August, September, I think if you have missed Maruti, this is the time to start building in your positions, because we think come the month of June you should again be seeing 9,000 and above on Maruti. So Maruti would be a good candidate to be bought at this 8650, 8700 after the recent weakness of the results, where where you had a little lower than consensus margins.
Okay. This is what I was saying. Look at the moves. This is, I think, since the start of this year, and Mahindra distinct outperformance there amongst the larger ones. 17% this year versus Maruti correcting about 10%, Tata Motors correcting about 22%. Sanjiv, of course, saying Maruti is also a good bet to buy on in this one. Well, on a relative basis this year, just this year, okay, I'm not looking at the base, but just this year, Maruti is underperforming in M&M by 27%. Well, could that correct? That's the question. By the way, it's not just this year. I'm just looking at the index right now, 95 points higher, almost a century there, 10,714. And M&M is leading the charge there, but Reliance Industries has given a big sharp up move there. Bajaj Finance is clawing its way back to 1900 levels. Gale and Larsen and Toubro are among stocks that have also inched up in the last few minutes of trade. So a sharp surge into some of these names. Hemen, Kapadia, I want to come in here. Large caps. I mean, is there a trade in any of these? Mahindra, Reliance, Tata Steel, or Bajaj Finance?
I think Reliance easy as one. Short-term trade in Reliance, BTST sort of a trade, Neeraj.
Okay, BTST and Reliance Industries. Vishal, a bunch of these large caps moving in the last few minutes of trade. Anything that catches your eye? Vishal, I was asking you if anything catches your eye in the large cap pocket. A bunch of these stocks are moving up. Mahindra and Mahindra, Bajaj Finance, Gale, Tata Steel, even Asian Paints for that matter.
Yes, I can see that some of the large caps doing very well in the last few minutes, and I think I'll still go with Reliance Industries, which I think can cross that 1,000 mark in the next couple of trading sessions. So I'll go with Reliance at the moment.
Okay, so going ahead with Reliance Industries at the moment. Sanjiv, Bhasin, you spoke about Maruti as a good stock to enter into, an ITC as a stock idea from your end. Now, what else? I mean, I of course love the fact that we spoke about Ujjivan and Equitas, and you believe that the stocks could be giving investors a biggest bang for the buck from amongst the financial space. What else? Non-financial, non-FMCG, anything else that stands out for you?
Construction. So NBCC again is a no-brainer. The management itself has guided 30+% growth on both top line, bottom line. The order inflow is just as strong as it's been in the last 2 years. The order book is worth 1,20,000 crore in the next 3 years, 4 years. It's just the execution, and they have a unique, PPP model where they sell 20% to the private builder, then use the funds, and execution is the key. So again, NBCC is a preferred play. IDFC has a bunch of holding on its asset management and the securities business, which it is looking to divest, where the market cap again can give you a huge one-time dividend. I would say that again becomes a very, very strong buy for a target of 70. And these two would be, aside from that, like I said, in construction, real estate, you have to be choosy. Godrej Property, one of my top picks, all the way from 290, 300 is close to 850. I don't rule out targets of 1100 there. Shobha Developers, again a good, one of the best franchise brands going. You would again see inordinate numbers on the execution side, target of 800 over there. So the list is endless. You have to just pick your winners. Nagarjuna Construction, it has delved itself well in the PPP model and sold some of its road projects. So I think again that will be encashing a large part of its portfolio. That again becomes a very attractive buy for a target of 150.
Sanjiv, before we let you go, there are a lot of stocks actually which have followed on back of earnings today, be it Walkhard, where it's reported a loss of 155 crore. Also, I guess Deepak Nitrite right now is trading in the red. But look at something like Indocount, that's down almost 7%. BASF India, where profits were up, but there was some bit of margin contraction which did not augur well. That's also trading in the red. Some bit of recovery seen, however, for that counter. Anything among these numbers or the companies which reported weak set of numbers, you have any commentary?
Yeah, so I was very impressed with Vijaya Bank numbers. Despite a much higher provisioning of about 12 to 14%, because of the change in RBI, it has still reported a strong net interest income. Now, Vijaya Bank is also the first of the PSU banks which has reported numbers, and it's a large corporate lender. And I think it tells you that the pain may not be as much as the market has made out for some of the corporate lenders. So you know, look to buy some of the corporate banks, particularly Bank of Baroda, Indian Bank, Bank of India, Vijaya Bank. These are going to give you good returns if bond yields again fall and you get recapitalization faster than you thought from the Government of India.
Okay, Vijaya Bank, we'll be tracking that counter. Thanks a lot, Sanjiv, for joining us today and taking us through your views on the markets and also on individual stocks that you like. Well, moving on to the chart of the day, Shraddha Babla is here to tell us which is the best performing commodity so far this year. Shraddha, over to you.
Well, there is a surprise outperform in the commodity pack this year, and no, it's not one of the metals or even crude oil for that matter. Now, cocoa prices on the Intercontinental Exchange in the US have advanced as much as 49% this year, which is the orange line, and this are prices, of course, till Friday. Now, this is on the back of rising fears that the market oversupply could actually revert to a deficit in this season. Why so? Well, this is due to accelerating demand combined with supply concerns on less plantation acreage and investment, along with dry weather affecting bean quality in West Africa, which is the world's largest cocoa producing region. Now, all of this, of course, according to Bloomberg. Now, the cocoa contract is the world benchmark for the global cocoa market. Now, cocoa returns have beaten also some of the other agricultural commodities as well, because the next best performing commodity is lumber, which has returned about 30% so far this year in comparison, still a good 19 percentage points lower than what cocoa has returned. Now, the London Metal Exchange zinc, on the other hand, has corrected by about 9.4% this year. And nickel, which is the best among base metals, has returned about 8%, while aluminium and steel prices have corrected by 0.1 and 4.2% respectively. From the energy basket, you have NYMEX gasoline, which has risen about 16% this year, and sugar, of course, is the worst performer with a loss of over 23% this year. So get ready to pay or shell out more for your favorite chocolates. That's today's chart of the day.
Hey, the point though, Shraddha, is that you may have to pay more for the bar of chocolate, but sugar has fallen, and therefore the manufacturing prices for bar of chocolate might actually get compensated a little bit there.
Well, I would believe that cocoa would probably be a larger input material or as a percentage than sugar, but yes, there could be some trade-off. Having said that, I was, Neeraj, actually reading up on what some of the large US chocolate giants had to say in their earnings conference call, and they actually said that they have hedged the cocoa futures at least for the first and the second quarter. We're in the second quarter now, but they would consider price hikes going ahead, and hence that statement.
Oops. That's not a good sign for a chocolate lover. Most of us are. Thanks so much for that, Shraddha. Thanks for putting that into perspective. Navneet, Hemen, chocolates? Anyone?
I'm not a chocolate lover, unfortunately.
Hemen?
Unfortunately.
I can't for obvious reasons.
Okay, there are no obvious reasons, Hemen, per se, but very interesting chart of the day. There's something different than what we are usually used to. So interesting. Anyways, before we slip into a break, here are some of the top voices that spoke to us on Bloomberg Quint earlier in the day.
I don't see that the goalpost is. One is that as I said, the recognition part, and in the last 2 years, the recognition part is almost complete. Rather, I should not be using the word almost. For State Bank of India, I can say for sure that last year by March, we have recognized all our NPLs. There were certain dispensations available where even if the asset was stressed but was allowed to be kept standard in certain circumstances. So even those dispensations are no more available. So that's why we are seeing some elevated NPS. But this year, I am very hopeful that the NPL number, both in terms of gross as well as net, it will come down.
Our core return on equity has now crossed, is touching almost close to 15%. And the loan book has got significant scale at about 27,000 crore. So we believe at that large scale to generate a good return on equity, that too with the bank platform, we expect the cost of funds to be lower by about 1%. I think together this is a very powerful engine which is going to drive that machine. Equally at the bank level, I think they're doing a good job and posted good results. I think coming together, I think the business can grow, at least the retail business can grow at upward of 25%.
We think the Indian real estate market is at its very nascent stages of growth and is likely to be a very high growth opportunity for really the next couple of decades. And our goal will be to capture as large a share of that market as we are able to. Our focus for the next few years is going to be primarily on the top 4 real estate markets in the country, which are Mumbai, NCR, Bangalore and Pune. And we see extensive opportunities within those cities to do both affordable housing developments as well as mid-income and premium housing developments. So all of those areas will be key areas of focus for the company.
3x, our business is very simple, that we are, I think, the 5th producer in the world, and I think the operations what we are carrying on, we have, I think, recently acquired in Baur area new project which will launch, I think, in very soon, and the productions naturally are going to, I think, go by one I think at least 30% up. The supplies also will go up. We are also supplying to a big vaccine Malaysian company, where we are getting a few more orders. So I think it looks a little bit very exciting, that side.
We will need to clarify, are they in the mood to hike rates in the near term? If the RBI is doing OMOs to support the market, and remember they have also devolved bonds on PDs in the last couple of auctions, essentially to stop yields rising too much. All of these signals seem to suggest that the RBI does not want yields to rise. So they will need to clarify, I think, in the next policy, whether they are indeed as hawkish as the market is rating them to be. And I think if the RBI is hawkish, you will see yields rise despite open market operations.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई, हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Back with Countdown right here on Bloomberg Quint. 30 minutes to go for the markets to shut shop. We're doing rather well for ourselves. Bring up what the world markets are doing at this point of time, just to get a sense of whether Europe is playing ball as well or no, because we are in extremely fine fettle today. The rest of the Asian pack wasn't, but we are in extremely fine fettle. And Europe seems to be having an okay day of trade as well. CAC notwithstanding, DAX has about 1/3% rally, FTSE about 1%. So the rest of the world is a fairly happy place as well. Okay, in a day like this, is probably a plethora of choices that Yash Upadhyay might have for his Fab 4 stock. So let's get him in on the conversation and try and figure out what's made it to his list this afternoon.
Good afternoon, Neeraj. So first up, we have SQS India. The company announced a good set of numbers. Their revenues are up 9% on a quarter-on-quarter basis. Net profit is up 82%, aided partly by another income element, while their margins have also expanded by as much as 450 basis points. So all in all, a good set of numbers, and the stock has reacted positively. It's up about 8%. Now, Taj GVK Hotels is up 12.5% today. HDFC Securities has picked the stock as its stock of the week. Now, they have set a buy rating and have set a target price of 266 rupees, indicating a potential upside of more than 25% from its previous day's close. Now, they believe that the company's opening a new premium hotel in Mumbai would help reduce its dependency on the Hyderabad market, whilst also improving their average revenue per available room, and also their efforts to reduce their existing debt using their cash flows would augur well going forward. Reliance Infra is up 6.5% today after the company announced that its joint venture with Italy's Astaldi has won the 7,000 crore Warsaw-Bandra Sea Link project from MSRDC. Now, the other bidders in the fray included the likes of L&T, Samsung joint venture, Hyundai Development and ITD joint venture. Now, the almost 17.2 kilometer long Sea Link is almost thrice the length of the existing Bandra-Worli Sea Link and is expected to be commissioned by 2023. And finally, we also have Suven Life Sciences. This one has surged as much as 6.5% today after the company said that it has received the establishment inspection report from the US FDA for its API facility located in Hyderabad. Back to you.
Hey, thanks a lot for that, Yash. But wow, this is interesting. And for somebody living beyond Warsaw, this is music to the ears. 6 years time from now, from BKC or from Lower Parel, the two business hubs currently, you will have a really decent ride back to what is arguably right now taking about 3 hours in bad monsoon days.
Yeah, but it's going to take 6 years.
At least.
At least.
Let's qualify that. But hey, better late than never.
Yes, I just want to address the Exide numbers which are flashing there on the screen. The profits have are higher by 16%, which have come in at 190 crore. As you can see, just post the numbers, that sudden move came for the counter as well. It's up 4%. The revenues are up 26% at 2459 crore, and the EBITDA for the quarter has come in at about 35% higher at 338 crore. So on the face of it, the numbers are looking good. Hence, you're seeing that positive reaction coming in for the stock of Exide. Vishal, on the charts, Exide at current levels, would you initiate any sort of position?
Exide, sorry.
Yeah, Vishal, go ahead. Exide.
Yeah, Exide I think is a stock which is giving good momentum in the last couple of weeks, and trading especially about the important resistance of 240 has made it very strong. So I'm looking at a potential target of around 295 to 310 in the short term for the next 3 to 4 weeks. So definitely looks a buy on the buy side.
Okay. looks like a buy, at least on the charts. Let's also get some fundamental view going on the earnings of Exide. And joining us now in the studio is Sharmila Joshi, independent investment advisor. Hi Sharmila, good afternoon and thanks a lot for joining us. What are you making of the Exide numbers?
Well, I think they're better than expected, especially on the margin front. The picture definitely seems better. And I think at the end of the day, you have only two listed players. You have Amara Raja and Exide. And we've seen always that Amara Raja gets a better valuation than what Exide enjoys, and it's only been in the recent, I think, past of maybe 2 or 3 months that we've seen some amount of catch up from
in the
Exide.
last 1 year, both these battery makers have actually underperformed.
Yes, but I would still say that Amara Raja is valued a little more highly, and I think most institutions prefer an Amara Raja to an Exide. But I think there has been some kind of a catch up from Exide, because it used to trade, it used to languish rather in that 190, 200 kind of range, and we've just seen very recently that it's moved to this 250, 240, 250 kind of level. So I think good results can only mean good things for the stock, honestly, and some more catch up is, I think, on the cards for Exide.
Just want to point out the stock price of Som Distilleries as well. Just a sudden sharp surge there. Don't know for what reason, of course. Nothing that's flashed on the screen so far. But look at that big pull up there, 12.5 or 13% at 307. This takes the stocks to new highs. I was just looking at the list of the stocks at new highs, and this one suddenly popped up there, and which is why it came to my notice. Watch out for that. But anyways, yeah, Exide and Amara Raja, both of them doing rather well for itself. The other set of stocks which have done extremely well, Sharmila, the last few days have been these staffing companies. Quest Corp now at these prices is nudging those new highs for itself. TeamLease for the last few days has been trying to do that as well. Two companies and maybe a couple of other more. SIS India kind of falls in that list of staffing per se. Do you like this business, or do you like any of these businesses?
Yes, I think that TeamLease, I believe we may have discussed earlier, because I think out of the two, I probably between Quest Corp and TeamLease, I prefer TeamLease. But that said, I think that at current price for both stocks, they seem to have sort of reached valuation sort of. I don't think that they'll run up in a big hurry from here. Because I think a lot of positives are now priced in. So even if you say yes, this kind of staffing business, and to have not have a permanent staff, but to have this kind of increasingly this kind of a solution for your employment needs is definitely something that you see as a trend in a lot of sectors going ahead. And again, the fact that TeamLease, the kind of acquisitions that it's done, and how they're now all paying off, even for Quest Corp, that deal with Thomas Cook, that again was something that was widely discussed. So I think now the positives are in the price. So I don't expect them to correct, but I don't really see them running up too much from here.
Interesting. Today, the TeamLease has corrected quite strongly, but Quest Corp continues to nudge higher, and 3% that takes Quest Corp to new highs for itself. Hemen, not typical trading stocks, but what do the charts indicate, Quest Corp in particular?
We've got a little bit of paucity of data, Neeraj, but whatever data we have, clear higher tops, higher bottoms, even on the longer term charts. And yes, we posted a fresh all-time high today. So it's in an uptrend that continues. There was an intermediate high a couple of months back at on 1165. As long as it sustains above that, I don't see any major reversals. No, seems fine.
By the way, I didn't ask this question to any of you, either of you. Hemen, the Nifty at 10,709, would you take a trade? A BTST or something like that?
No, I'd duck this one.
You've been avoiding Nifty for a while now.
Thing is, those gaps were to get covered. Navneet, we spoke about that some time back. Gaps are covered. 10,702 to 10,730. We spoke about it a month and a half ago. The daily MACD is in sell mode. The Nifty is bouncing back. Bank Nifty is better. I'm not sure why I would buy the Nifty, and I don't know. I'm slightly worried. Maybe we get closer to the election, the VIX will creep up. Right. It's fine. I have a feeling we could stagnate a bit. Maybe it's misplaced. Too many stocks are popping around like popcorn. So looks good, but I'd duck it.
Okay, you will duck it. Vishal, Malkan, can I ask you if you would trade the Nifty or the Nifty Bank from these levels? Now that we're trading in the day's highs, would you initiate some fresh trades? Either, there could be option trades as well, or plain vanilla futures if you want to.
I can go with Bank Nifty rather than Nifty. As I mentioned at the start of the interview, that Bank Nifty can outperform, and I'm looking at some PSU banks to do very well in the next few trading sessions, which can lift the Bank Nifty well. So I'll definitely go with Bank Nifty for BTST if required today, and maybe also can go for long calls of ATM strike price.
Okay, stocks are moving up high and fast. Exide is now up 8% on the numbers. You know, somewhere down the line, I didn't mark Pfizer today, but look at that move on Pfizer as well, 7%. Not that it's moved up suddenly. I'm just making a mark here. That stock is trading at new highs and suddenly shot up. And the last few minutes of trade, stocks like Z2 have started to inch up. So while other stocks were anyways doing well, Z Entertainment 2 now up about 2% and just starting to perk up a little bit. Kotak Bank is at 1246. So clear traction across the board. And doing very well. Both Exide and Amara Raja, Z, BPCL, Bajaj Finance now almost 1900. The list of names is long and looking quite spectacular. 310. Before we move any further, I think it's the time of the show when we should try and get a sense of what could enter into the FNO ban or come out of the FNO ban. On Friday, we spoke about a couple of stocks, and Pat, you were on queue, Navneet. Is there a long list today, or is it a couple of stocks?
No, just 2 stocks, Neeraj. Let me start off with the company which might enter into the FNO ban for tomorrow's trading session, and that's Wockhardt, which is also one of your top losers in terms of FNO securities today. If there's been a good amount of short build-up that has been seen post the numbers, which were disappointing, 84% in terms of open interest as a percentage of market-wide position limit that was seen on Friday's session. So watch out for Wockhardt as it trades with cuts of 8%. And finally, do watch out for PC Jewelers, 43% higher on Friday, another 37 or 38% higher in today's session. It was in the FNO ban for the last few trading sessions, and there have been instances where we've been observing a lot of unwinding which has taken place for a lot of option strikes. So looking at the data currently, it looks like it could breach the 80% mark, which is required for a stock to come out of the FNO ban. And then, Neeraj, if it comes out, I think the bigger question is then people, will they go ahead and short on the future side or not?
Yeah. You know, I mean, just looking at the chatter, Navneet, on our social media pages as well, every show has a question on what's happening with Vakrangi and PC Jewelers. And invariably, any of the guests that we ask, rightfully so, don't really have a constructive call on what to do, and I don't blame anybody. It's just too difficult right now to give either a trading or a investment call on PC Jewelers for sure, if not Vakrangi. 238 and counting. Let's wait and watch. Any thoughts here? Or you would duck this one? I wouldn't blame you if you do.
Absolutely. This is not one to be taken. You know, if you remember, sometime back we had discussed Delta Corp, and I think, you know, that is also one of those stocks that's 5% up, 5% down, 10, 15% down kind of moves.
You justify Delta Corp with the kind of earnings they've posted.
Yes. At least it has earnings to back it, you know, and that also, but moves in these violent kind of this. And if you start talking of stocks that have moved 43% in a day, I think it's better.
These are actually the real wild swings that we've seen in the markets. Okay, moving away from PC Jewelers and Vakrangi, which we invariably get to discuss every single day, it's time to take a look what the dealing rooms are recommending in trade today. Let's go across to Darshan first to find out about the same, which are the stocks that the dealing rooms will be recommending in trade. And also joining Darshan will be Yatin Mota. Hi, both of you. Good afternoon. Darshan, over to you first.
Yeah, so I think today people are talking about ICICI Bank because that's the number that's will come out. But you know, a lot of HNIs have started taking positions on ICICI Bank. They believe that the numbers pretty much will be decent. They believe that, you know, despite of all the issues that are there as far as the RBI circular and the NPA is concerned, they believe that the commentary is positive. No doubt, you know, the papers have come out with indication that there's nothing in terms of, you know, any kind of issue related to Chanda Kochar, but a large portion of the dealing room does believe that there could be some bit of news that could come in terms of the management change or something. So that's the general trend that we've gotten on ICICI Bank. Steel stocks as such are doing well. Look at most of them have rallied. Even if you're looking at what's happening with steel across, in the last week itself, global steel prices are up close to 10%. They believe that the rally will continue. There is enough traction on all the steel stocks that's been spoken about. And the last stock that dealers are talking about is Meghana Organics. It's up almost 3% in trade. A couple of dealing rooms I spoke to, a large PMS has been actively accumulating the counter for the past few days. So we'll certainly watch out for this counter over the next few days, how it pans out in trade. But Yatin, what are you hearing?
Darshan, Jubilant Foodworks, that is one stock which is on the trader radar, and domestic funds are buying the shares according to dealers I spoke to. So this is one stock wherein dealers remain positive on, and in general the FMCG basket is looking at some good traction, good volumes also for Jubilant Foodworks, both in the cash and the F&O segment. Ujjivan, that stock is surprisingly down 6%. We had a quota downgrade today, but dealers do indicate that there is buying at lower levels, and that is the reason why dealers are recommending a buy today, sell tomorrow kind of a strategy. They're expecting some bit of bounce back to happen for Ujjivan moving forward. And Camlin Fine, that stock is also doing well, almost 18 lakh shares traded there. HNIs are said to be buying shares of Camlin Fine. A couple of small buldies also happen on the stock. And dealers expect a 10 to 15% short-term move as far as the stock is concerned.
Okay, thanks a lot for that, Yatin, as well as Darshanam. Inox Leisure numbers are out on the screen, and you can see there are some one-offs there too, but the numbers prima facie seem to be okay. I was looking at the profit before tax number. So there is a taxation refund which has come in, as a result of which it looks highly inflated. But if we just look at the PBT of 10 crores versus a loss in the corresponding quarter last year. So that just by itself makes it a quarter which looks fairly promising on a YOY basis. I'll also, of course, tell you about the EBITDA margin numbers, probable EBITDA margin numbers. I think those two look much better than what they did in the corresponding quarters last year. No, margins are actually okay. Margins have fallen a bit, but the PBT numbers look much better. So growth out there for sure. Maybe some one-offs that have come into place out here. But prima facie, the numbers look okay for Inox Leisure. 7.5% higher. A big move there for the company. Do you track the exhibition space, Sharmila?
Well, PVR, I think PVR is pretty much run away with it in terms of both market share as well as, I think, the kind of valuation that it gets. We got numbers from PVR I think just over the weekend, and they were okay. I think nothing really spectacular. And I think, as we know, a lot of the gains are really now in the kind of margins that they make on food and beverages, and so I think more and more is now going to be, the number of screens that you have and the number of cities that you're present in, and that's probably where PVR is taking it away at the moment. Right. But I think, as you said, as you pointed out, these numbers for Inox certainly looked interesting, and maybe I think it could be time to revisit the stock.
Yeah, I mean, the margins have come off a bit, Navneet. To be honest, cost of food and beverages has gone up for them meaningfully this time around, more compared to the kind of costs or kind of uptick in revenue from operations. There is a slightly higher other income, actually almost 3x. It's a small number, but that notwithstanding, the PBT numbers, reported PBT numbers, look very exciting compared to a loss the last time. And that's why maybe the stock is doing what it is doing. Yeah, that's right, Neeraj. It's 6.5% higher for Inox Leisure. So good going for this one with regard to its numbers. Well, Yatin highlighted Jubilant Foodworks. I think the earnings are also lined up for tomorrow. Ahead of that, we've seen some buying momentum for this one. 1.5% higher. It's touched its fresh highs in today's trade. Sharmila, well, the same-store sales growth number, I'm sure that's going to be the key metric once again. And they've given you figures like 17, 18% now in the earlier quarters. What are the expectations? Very honestly, I'm not a great fan, because I agree that the move in Jubilant to these levels, given the kind of SSG that they reported, made sense. But I think that now we are getting back to the stage where you said that where you say that SSGs at this level, it probably cannot grow much at a much more rapid pace than this.
you have free cash being generated. What do you do with the free cash? I think that's exactly the position that they were in when they made that investment in Dunkin' Donuts, and it went awry for them. So, you know, again, you'll be back to sort of that position where you're doing well and you don't know what to do with the amount of free cash that you're generating. And in the meantime, valuations have run up. So yes, I'm sure. And in the meantime, I think even competition has run up, because, you know, at one time you really had sort of ordering pizza as your only option. But now, you know, you have a whole host of options, you know, with the introduction of all these Swiggy and Scootsie and, you know, those kind of options. So I think the competition is certainly there, and valuations are high. So I mean, it's a stock that will definitely won't see the kind of correction that it has recovered from. But I'm not a great fan at this level.
Okay, yeah, maybe valuations are a bit steep for Jubilant FoodWorks for sure, but it's finding buyers almost every single time. By the way, as we just get ready to wind down trade, 11 minutes left, ahead of the results, ICICI Bank, not top-notch gains. Actually, Axis has now overtaken ICICI Bank in terms of the gains for the day, but ICICI Bank still holding out. So about a couple of percentage points higher ahead of its numbers. But GAIL is the real man of the match today, as is Mahindra & Mahindra. But look at Gas Authority of India. 4.5%. It's trending to, it's been a trend day for GAIL, and it's closing in at the highest point for itself. Before we get in the closing strategies, Vishal, if you track GAIL, for someone who entered into a long position earlier on in the day, would you recommend carrying home the long positions?
GAIL, I think, has given a good move today with good volume. So I think definitely it becomes, if someone is holding from the morning, definitely a hold. In fact, you can even buy more for BTST if you are looking for like couple of percentage in the morning by 10, 30, 11. So I definitely a hold for someone who's holding since morning and can add more today.
Interesting. Okay, let's nail it down to some closing strategies then, gentlemen. Hemen, I'll come to you first. If you had to bet on one stock, one BTST or one STBT, as the case may be, what would that be?
No, I think it would be a BTST, not an STBT. So I would have a toss-up between a UPL and probably Apollo Tyres. So yeah, or JSW Steel. I think I'll go for JSW Steel, Neeraj.
Okay. Which one are you choosing finally? JSW Steel?
Yeah.
Okay, so same 1% target or 2% target, 1% stop loss?
Yeah.
Okay, so that's Hemen Kapadia's call for the day. One JSW Steel is his BTST. Vishal, if I can request you for one stock before I thank you, one recommendation from your end for the day. One BTST or STBT?
I'll go for I'll go for BTST, and I look at Tata Global, which is giving a good movement in the last couple of days, and today's candle pattern is particularly bullish, and intraday momentum chart is also bullish. So tomorrow definitely a BTST today for 1% stop loss and maybe a 3 to 4% target for tomorrow's day.
Wow, Tata Global Beverages. You know, I don't, Vishal, thanks a lot for giving us this call. I just want to bring in the count that I don't know if the Nestle Starbucks deal would really have a meaningful impact on Tata Global Beverages. I'm not suggesting that's the reason why the stock is up, but don't go into thinking that that global deal of $7 billion will also ensure that the earnings of Tata Global or Starbucks India and therefore Tata Global Beverages go up meaningfully. It may not, we don't quite know that, but Tata Global Beverages trading at the high point of the day. Any thoughts here? I mean, for the long time being a dog of a stock, now the last couple of years has started performing.
Yeah, I would say the past 6 months or so. Till then it was languishing at again that 140, 150 level forever. So great news, but I completely agree. You know, I was also just reading the Nestle news. You don't know anything about it yet. So I wouldn't use that as an excuse to further buy the stock. But I think what people have also liked about this story is that they felt somewhere that it was due for a re-rating, you know, given the fact that so many things had happened, but it hadn't really reflected in the stock price. So there was a reason at that point in time to sort of buy the stock if you wanted a decent quality mid-cap to buy. But once again, I think valuations have now sort of run the kind of, you know, run the run till you see a further improvement in earnings.
Well, okay, pertinent point here. So that's the view. Sharmila, any stocks that people who don't believe anything untoward will happen in the elections and are willing to put in the bet right now? Investments. For the
I
next
don't know
6
what is
months.
untoward in the election.
No, I mean, whatever is not friendly, and I'm not getting into what is, what isn't. But
I know, but what I'm trying to say is that irrespective of the result, I think that, this is a state election and it will be taken as one a couple of weeks down the line after post the numbers being out. So there would be cause for concern if the result doesn't go the way the ruling party would like it to go. But that said, I think that, it will not be, it would not, I think, affect markets too much in the long run. And that said, then the kind of stock that I've gone with is really a bit of a monsoon play. I'm going with GSFC because we've seen, I think the valuations are fairly reasonable, first of all. Then we've already got indication that monsoons will be okay. So fertilizer income was up year on, is expected to be up year on year. Then you have that whole caprolactam bit playing out because there are only a couple of producers of caprolactam domestically, and we have China, which has shut operations, and in Europe you don't have again anybody producing caprolactam, nor likely to over the next 2-3 years. So they have that benefit playing out for them. So you have the main business, you have like an SOTP sort of a valuation investments as with a sort of a discount playing in their favor. So I think this is a great price to buy GSFC.
Watch out for GSPC, GSFC, right? You're saying, because I heard you say GSPC, so I got a bit confused. Okay, GSFC, that's the recommendation from Sharmila. By any chance, do you track GNFC?
This is the GSFC owns GNFC. So
did you like the numbers?
The caprolactam story completely plays out for
So
GNFC.
would you buy GNFC as well? I mean, I heard somebody speak about the kind of cash flows that they've generated for the year, etc., so on and so forth.
Absolutely. The only thing, the only difference here is that the caprolactam story has sort of already taken GNFC higher, whereas people have not recognized that the same holds true for GSFC, which is why I try to put focus on GSFC.
Okay, cool. So a theory of relativity of sorts that Sharmila is trying to play out here. What else? Just before we wrap up the day's trade, I must mark the index, which is up 102 points now and almost 1% higher for all the 3 key benchmark indices. Boy, it's been a great day for all those looking at the SGX Nifty and predicting that we'll have a dull day today. It's been anything but dull. Final thoughts before we start wrapping up the markets. Hemen, I know we spoke about Excite just 10 minutes back, but I'm forced to ask about it again. Let's say somebody entered into a trade for the results, looking at how strong the numbers were. Should he carry on the long positions? I mean, cash market or otherwise?
I think so. First, the stop loss needed. Secondly, there's a 22% open interest built up in Excite. So I have a feeling that notwithstanding a small breather, I think we have legs for a further upside.
Okay, so that's Excite for you. And I'm just looking at stocks which have moved up in the last few minutes of trade on the cash side as well, while Excite was probably one. There's some moves that have come in Balrampur Chini, Adani Transmission and Sun Pharma Advanced Research. Vishal, before I thank you, and last question to you, Balrampur Chini, Adani Transmission, Sun Pharma Advanced Research, anything that stands out for you?
I would say sugar stocks, Balrampur Chini should do well, at least for the next couple of trading sessions. So if I have to go for BTST, something like that, then I'll go with Balrampur Chini.
Okay, Vishal, we'll let you go on that note. Thank you so much for taking the time out and being with us today and giving us your thoughts. If at all, here Vishal is saying, if at all you need to take a trade from amongst those late movers, then Balrampur Chini it should be. Okay, let's try and wrap up the markets today, and it's been one strong move. I'm happy I'm standing next to a number which is looking, which is a century number on the Nifty, about 100 points for the Nifty, 300 points for the Sensex, and the Nifty Bank too, about 1% higher. So it's been an all-round show that we've had in the markets today. Mid caps and the small caps too, albeit not in the same vein. The market breadth is not as robust, but 0.75% for the mid caps and the small caps. You'll probably take it with both hands on the first day of the trading week. What about specific stocks? GAIL 4% higher, 4.5% actually. It's been a good move there. And M&M has been the man of the match, to be honest, about 3.5% higher. ICICI Bank, a bit of a late surge, was up about 2% 10 minutes ago. Now ahead of the numbers, up about 3%. Axis Bank following suit, about 3% as well. Some gains for the commodity names, Hindalco, Tata Steel doing well, and SBI participating about a couple of percentage points higher too. So good going really. Pharma took a bit of a backseat. Lupin, DRL, Sun Pharma, Cipla, all of these are have gone down today. HDFC Bank contributing a little bit to the downside, but frankly, the list of gainers far higher than the list of the losers. Actually, similar moves coming in for the broader end of the spectrum as well. So let me try and highlight some stocks which have done very well at the mid cap and the small cap end of the market, and they will come up on your screen. Firstly, the gainers, and starting off with PC Jewellers. I think big move really for PC Jewellers today. Good start, good trading day, ending about 39 points higher. So really strong show that has come in by PC Jewellers in the session today. Let's move on to some of the others. We've had strong moves coming in a lot of other stocks, and they'll all of them on your screen. Really strong shows that have come in by these 3 or 4 names. Good going there. And then equally, there have been a set of losers which have been there on the screen today. KC International is an unfortunate name, but a clutch of other names have come out and lost some sheen in the session today. But I just want to throw some highlight on stocks which have hit fresh highs in the session today. So Pfizer forms a part of that list. Good moves for Pfizer in the session today, up about 6 or 7%. Good moves for Exide, up about 5.5% and hitting new highs. There are a couple of others like Quest Corp which have done that too. So all in all, decent day. The breadth probably not as strong as you would have it in the large caps, but you probably would not complain. And that brings us to the final picture. As we're just getting ready to shut shop and the markets are still on, it'll be pertinent to get the heat map on and show you the kind of distribution that we've had on the benchmark indices and some of the Nifty 50 names today. Some very strong moves that have happened on GAIL, M&M, as I said, and the banking names there. Reliance have 2 percentage points, ITC about 1.5%. So you have some heavyweights out there which are doing really well, and which is why we're not missing the pluses that would naturally or should come in from the HDFC twins. Nifty Bank up 1%. You don't have HDFC Bank participating. You don't have HDFC participating in a meaningful way. So the 2 of the heaviest names have not participated today when the Nifty Bank has done what it has done, which is up about 1%. The market breadth, as I said, will come up next on your screen, and not really the best of performances on the market breadth either. In fact, narrowing towards the close of trade, the market breadth was just about ho-hum. The contributors list will probably see ITC and Reliance Industries right out there. ICICI Bank, top of the list, but Reliance and ITC here, and Mahindra by virtue of the smart move that it had, up about contributing about 7 odd points. GAIL will be somewhere out here in this list, not a heavyweight, so it doesn't contribute too much. Nothing too bad. HDFC, TCS, hardly any moves there, but just the weightage leads them to be here. And then the pharma names, Sun Pharma, the others, tiny tunes in terms of the weightage, and therefore not really leading to a meaningful chunk of contribution on the losing side. So which is why all in all, about 104 point kind of an uptick. The turnover lastly will come up on your screen, and well, actually substandard the turnover in the session today, both on the cash market side as well as the FNO side. Well, a fairly lackluster turnover, so the participation hasn't been that strong. I wonder if it's picked up in the last 1 hour of trade, because there was a bit of a flurry of activity, at least in the large caps in the last few minutes. So maybe the FNO space could have been active, or the Nifty turnover too could have picked up. Okay, final thoughts from our experts, and Hemen, I'll come to you first. Just looking at the kind of moves that have happened, would you believe that this can extend itself in the next couple of trading sessions?
Yes, and particularly the Bank Nifty, Neeraj, because we've added almost 14% in open interest. We'll need to wait for the final Bhav copy, but 14% open interest addition, and Nifty is riding piggyback on the Bank Nifty. So yes, I have a feeling, and we close about 25,800, Neeraj. So Bank Nifty seems to be heading towards 26,126. So yes, coming back to your main question, couple of trading sessions, yes, and as long as the Bank Nifty remains in the pink of health, things will remain hunky-dory.
Interesting. ICICI Bank, Sharmila, if it, ahead of the numbers, fairly strong show. If it doesn't disappoint, what next?
Well, let's hope it doesn't disappoint, because I think that what we've seen is that when results are sort of along expected line, market is rewarding them, even if you said that the number is going to be bad. Like for instance, in Axis Bank, you expected a bad number, you got it, and you sort of life just carried on from there. So let's hope we see the same with ICICI Bank. And I completely agree with Hemen's point. A lot does depend on Nifty Bank as an index, for market direction from here. So from that aspect, the kind of weightage that these banks have, even in the Nifty, I think that it's very important that we see this sort of playing out as per script, and then you can continue from there.
Interesting. Watch out. ICICI Bank, undoubtedly the most important stock now between now and tomorrow morning. Top contribution on the index by virtue of its move just ahead of its numbers, 289 and counting. Let's wait and watch what happens there. But with that, it's a wrap on this edition of Countdown. Hemen, Sharmila, thank you so much for joining in, and viewers, thanks so much for tuning in. But stay tuned, because we'll be back with the Bloomberg Quint market wrap on the other side.